All right, good morning, guys. Welcome to another daily review. Got some free time this morning, so I thought I'd jump on and go over the price action. How we going? We got 19 in the audience. Did you guys have a good New York session? Just traded evals, yeah. The FOMC. Hopefully you can pick something up in this stream, AC 4023. Nice to have you in here, so. Interesting day. I started the day coming into Asia bearish. I was looking for PDL to get taken quite early on here. But as LMT would say, we need to flow like water, and we move and adjust to what the market is doing, not with our concrete ideas. We don't get set as such. So starting off, just zoom out a little bit here. We have how we set our chart. So we have our PDH, we put our PDL on, and we do our fixed range volume profile, which is just under here, fixed range volume profile from our PDH to PDL. We get our point of control. I've got that one drawn on the chart. Yeah, we'll pop that on here as well. This was where most of our volume came in. And we're drawing our OTE. So from our PDH to PDL, OTE being our optimal trade entry. So we're looking for price, ideally, if we're getting bearish continuation, to push up into this OTE area. And then if looking for shorts back to PDL, we would want to look for shorts from around that area. So we had Asia, and then so we've come in at the end of New York PM, swept the local high here. For Asia, I was looking at a SBS count. Could put in the chart. So it had our break of structure here. 1, 2. We get our low. We break the swing of 2. 4, and then 5. So I was looking for continuation down from here into the Asia Open. We had our new H4 had opened, and it's just gone open low, broken structure. So switch bullish here. And then we've got our Q1 manipulation zone. So for those that are new here, we're looking for the 5-minute break of structures, a change in state of delivery, so the high that made the low. We look for this breakout. We have displacement here. So I did put some examples of this in my mentorship channel over the weekend. So we're within this 4-hour open from 1800 to 2200. We've open low, broken structure, change in state of delivery. We've got displacement. And then we're looking for longs off of the retest of this zone. I'll just move this over. So we look for the PD arrays within the zone. So we've got the bullish order block here. I'm just calling that plus OB, 5 minute. And we've got the FVG, which BISI here, which is within the zone as well and expands out of the zone. So orders can either be placed like off this order block here or straight off the zone there for longs. And then we're looking at take profits at SD 1.5, SD 2.5, 3.5, and into 4 or 4.5. So I'd missed this move due to having that, looking for bearish continuation here. There's a couple of members in the group that managed to get that nice long. So we'll just watch that continue on for the Q2 into Q3 for Asia. But this is a nice example of what I've been just working on in the mentorship to try and show you guys for entry conditions. So we get our zone. Oops, sorry, I had that box in the wrong spot. So we get our zone, we have our breakout, and then we draw our rectangular box on. And we're looking for the price to come back into that zone. And we also do our OTE fib from the low to the high. Extra confluence there, so we line that up. Let's move it in a little bit. And as well as the PD arrays within the zone, we also have our optimal trade entry point 0.62 here. We can see was hit there as well nicely. It's been a very nice trade to start the day. From there, we've gone into Q3. So we've made our high, we've gone into the SD4, 4.5. Hey, Chef Trades, welcome. Nice to have you here. So we've reached our standard deviation high levels here. Wicked in to SD4, and then price is broken here. There was no displacement in this. So hard to find a good setup here. So I ended up just watching this play out and didn't trade this back down. Looking at the H4 again, so we've got our 2200 open. Prices opened high, gone back into, so we can still draw this higher as a zone, which we have here for the 4 hour. So it's opened high into that zone for the 4 hour and then come down from there. So same thing, we do our manipulation box. And then we can put in our standard deviation levels from this swing, low to the high. And draw out these levels for take profit areas. For those that are new to the standard deviations, what we're looking for, the reason we're taking profit at these zones here is we're looking at reaccumulation for longs at SD 1.5, reaccumulation phase 2 at SD 2.5, and then for price to reverse around 3.5 to 4.5 is your reversal zones. And then same on the way back, instead of reaccumulation, it's redistribution around these zones. So a lot of the time you'll find we'll get reactions of price at these levels. And as for, rather than having partial profits on the way, I've been looking at taking these trades on separate accounts. And that way we can get a full profit at each level on different accounts, rather than price just saying going up to SD 1.5 and you're being incorrect and you're only getting one partial, if that makes sense. So I would have been happier to take a short here if we had displaced and made a fair value gap here, or even a BPR from here. Anyone that did take that position, we'll be waiting for that zone to break. Shorts with stop above the zone. TP1 SD 1.5, TP2 SD 2.5, 3.5, and down to the 4 or 4.5 for the last TP. Should have been quite a long hold. You can see we got that nice reaction off SD 2.5. Price bounces back up as we're into London. And continuation down. So this is our manipulation leg here. For London. So we are, so quarter one sell off, quarter two. So we've got our TMSO. That's our true market session open. So these are the quarter two opens of the 90-minute cycle. We've got, this is our TDO level, which is our true day open. So our midnight open. And price has gone straight underneath that. So for a bullish day, we want to see manipulation below true day open and below TMSO in the 90-minute cycles, which is exactly what London's done. We've created all these liquidity levels. So each of these small highs here are creating liquidity. So if we're watching this come down and we're not in a trade, it's okay just to sit and watch. We're like, okay, it's building up liquidity. This is good. We want to see some levels build up. So we've got levels to trade to once we break structure for the way back. So we come into London quarter three. We know that's, we have a high percentage chance of that being a manipulation point for London. It's higher than quarter two or quarter four. And we just want to wait. So we then see we have our change in state of delivery here at the end of quarter three. We've broken above. We've got our bullish FVG, our BISI. So we've broken through with displacement. We look for our PD arrays within that zone. I'll just drag that zone back over. We've got our H4 here. So the idea, you know, we've opened and we've gone low straight away from that H4 open. So the idea being, we know there's a high percentage chance that quarter three is a manipulation, and it's plausible that this is the low for that H4 candle, which it was in this case. So we've broken out. We look for our arrays within this manipulation zone. We've drawn on our zone. We have an inverted bearish gap here, an ICB, which has been flipped. And we're looking for longs on the retest of the zone or within the zone at the PD arrays. So we can also put our OTE on, so from the low to the high. And then we grab our long tool. And if we look at that entry from the ICB, stop below the zone. And TP1 at SD 1.5, TP2 2.5, 3.5, and then 4. Put them on as well. How are we all going so far? Any questions? We can see after this move, we then got some consolidation straight away. Oh, and I'm sorry, on the entry points, extra confluence for the entries, we want to use those 1 hour macro times. So for those that don't know, the macro time is 10 minutes before the hour to 10 minutes after. And what we're trying to do then is catch the 1 hour candle's wick. So if we're looking for an open low of the 1 hour candle, we want to catch the wick of that low and then get the expansion of that H1. So here we hadn't broken out yet, but this was the 4 o'clock candle. So we've opened, we've gone low, that's our macro, and then expanded higher. And then down here, our macro time, 5:10, 5:15. So the 5 o'clock candle has opened, low, and then high close. So that's in line with our entry point. So you know why this is playing out, it's okay just to sit and wait. We're waiting for the break. We don't want to rush. If it just takes off from here, that's okay. We miss out. It's come out, we've come back, we've retested our zone. We're within that new H1 macro time. We enter here at 5:10. And away we go. Hey, Amy, Chris, FX. Nice to have you in here. Thanks for joining in. All right. So we've got our London manipulation zone. We'll drag that back across. You can see also with Asia here. So all of this low resistant liquidity runs here. The whole time gives us confluence for the long for these. Each of these highs to get taken. So nice grind down, creating all these levels, which help us stay in the trade for the long here. And when entered during that macro time, it's just minimal drawdown taken. Definitely worth using those macro times and having them in your toolbox. So we've got our London Q3 zone, which ends up being the low of the day. So stop loss is always safe underneath there. Once price reaches our SD 1.5, it's the rule I'm using at the moment, is that's when you can move your stop loss to break even. So I took this trade as well during the day. It did end up closing at 7 o'clock macro here, 7:15, and that's sort of when I end my day and get ready for bed, as I live in Australia. So it was out here. And then nice to wake up into the morning, this morning, and see that that was the low of the day. So price continues on. We've got New York Open quarter two here. So quarter two open is our true market session open for that AM session. And then we're looking for manipulation below that for continuation higher. We can see we've made our quarter three. So high percentage chance we'll get the manipulation in quarter three as well for New York AM. We've come up, we've taken Asia high, drag that all the way across. Sweep of Asia high, manipulates down. We get our change in state of delivery here. We have our bullish fair value gap. So change in state of delivery. We've had displacement. We do our fib from the low to the high. Just take off that magnet. And I'll just bring this back so we can see a bit better. We're now in a new 4 hour from 10 o'clock. So we've opened, we've come up, and we're coming back to retest the zone, preferably to be the low of the H4. And we're within the 11 o'clock macro now. So 11 o'clock, 11:05. So longs would be off either the zone or the PD array within the zone. Stop loss below. And we're looking for SD 1.5. $2.5, 3.5, and 4 to 4.5. Once SD 1.5 is hit, stop loss goes to break even. We've got a quarter four expansion. So we had our 1 hour macro, expanded up, and then it's sort of grinding down for quarter one of the PM session. Once again, we can look at this and these moves similar to that Asia one. You know, we're getting this grind down. It's creating liquidity all the way down. We've got our zone. We'll drag that back across. And then price comes back, retests the zone. We've got our red news folder candle here. Comes back, tests 50% of our zone. So if we were still in, stop loss is still safe here under that quarter three manipulation low. And then we've had our news and then straight into expansion, as well as the new H4. So we've opened low, expanded high straight to PDH, which is in line with the SD 2.5. There's our main daily expansion. Yeah, very nice leg if you guys managed to get in on that and trade that. Straight up to 3 o'clock for the high of the day. And then if we're looking at the macro times, is your stop loss always a manipulation over low? Yes, correct. Yeah. That way, the idea then is you're trusting that zone, and the zone's going to hold if it's correct. If it's not correct, the zone will break and it will get flipped. So for example, if we took the short here in Asia and we're trusting the zone here, even though this sort of looks like a reaccumulation curve, if we'd taken the short, we'd have to trust the zone that would hold. Otherwise, the zone will get flipped and then retested. And we could look for longs from here during another macro time. So where it's worth too, if you go back through some of the daily reviews that I've done in my channel and you look at the zones, like when we're in bullish structure, a lot of the time they'll hold and they'll stack on top of each other. So we've had our London Q3 manipulation, and then New York manipulation comes back to mitigate orders that were still in that manipulation. And what I mean by that is price was forced down here to sweep the Asia low. That manipulation swing shorts are used to push the orders down to fill long orders, to push orders back the other way. So then if shorts are still stuck within this zone, price will then get manipulated down again to release those shorts. And then you get those strong moves up afterwards because all the shorts that were in the zone are being released and turned into longs, and that pushes price back up. So each time price comes back, mitigates those orders, and then you get these expansion moves, which is what we're trying to catch. So we want to trust those zones and SL underneath. And if, like a lot of the time, New York, your zones are going to be quite large, like this. So that's why we want those arrays within the zone to try and make it tighter. And we just got to size down in those cases if you've got a large stop loss. So same thing here. If we hadn't, if this manipulation zone got swept here in the PM, then we would look for a retest of that zone during a macro time for a short order. So that was our expansion for the rest of the day. We've hit that PDH and hit the SD 2.5. Another reason why having the orders and the risk spread out on separate accounts, as LMT would talk about using risk sinking, rather than taking partials, then we're getting our full take profits on separate accounts at SD 1.5 and 2.5 in this case. And then we'll be closing out, end of Q3 in the PM session. So we'll take the rest of the profit here. On the previous accounts, as we know, Q4 in the PM session just consolidates. Like this just happens every day. We hardly get any expansion moves. Now, which also makes sense. We have our daily candle. So we've got our daily candles opened. Let's create our low. Let's create our high, which we have here. And then we have to create the rest of the wick of the daily candle. Oops. So price comes back and then closes out. So that's our open, low, high, and then we come back to close. And this section here where it does nothing is normally that Q1, and this is normally the start of Asia. So we've got London for the low, manipulation, expansion, and then back down. So quite a nice bullish day. Coming out from bearish prices. Big sell-off here from the previous day. And we just have to work with the market and trust those manipulation zones and the breaks. So as soon as these lows didn't go and this failed, London comes back, sweep of Asia, then we have to trust this break of structure. We have to trust market structure, and the zone will hold until it's incorrect. And move with the market. We can't keep being bearish through this when we're making higher highs and the higher lows. And even if we were looking, we weren't confident that price would get above the OTE here, we still have our take profit areas from London up here that lead into that OTE. Any questions on daily price action there? So we've got our zones, our retests, our orders. Looking at those macro times for entries. And we love price action like this that just builds up liquidity. It's building up fuel for our trades and confluence for these long positions. Same here. Even this section here. Low resistance liquidity runs. Prices opened up straight away this morning or this evening if you're in New York, and then taken out all these low resistance liquidity. All right, let's get the chart ready for today, and then I might end the stream there. So I might just get a different chart to use. Get a MNQ1 with the contract change. So let me clear this. And we want to get, we're going to our daily. First step, we get our PDH, PDL. Mark them on the chart. And turn my magnet back on. What indicator am I using to plot my grid? Do you mean for the 90-minute cycle? Use this one here, Yamaya 90 cycle. And that gives us the 5-minute, 90-minute vertical lines here. And then we're looking for those manipulations in quarter 3 or quarter 2 of each session. All right, so we've got our PDL, PDH. We do our OTE. And it will be reversed. We do our fixed range volume profile here. And we go from the low, so PDL to PDH. And we're looking where the majority of the volume come in during the day. And we want to get our PD arrays within those zones. So we've got this swing low here that caused the breakout. We can drag that on here, which also lines up with our OTE there for a point of interest. We want to grab our London zone here that caused the low of the day. And we'll just relabel that London Q3 manipulation. And we want to get the high point here from, so this is our quarter 3 New York PM high. Swing is quite large in here. We'll just grab that last candle there. And I'll look at that 1 minute in a sec as well, just to see if there's a clearer box there. That's 21, 31. Yeah, it's pretty much that whole candle. Going to pop on our 4-hour levels. Six, 10. And we'll draw our point of control across. Fixed range, volume profile, point of control. So ideally for continuation, we want to see price come back and build some levels through here. Similar to yesterday, into London, creating all these lower highs and liquidity points into a manipulation point into London. Would be nice for another London low of the day. Into this zone, and we get our break, and we come back through. This would be the ideal scenario. We wait for a change in delivery again, and a macro time in here, and we would then draw our manipulation box on once that happens. We look for the retest of the box, PD arrays within the zone, whether it's a inverted fair value gap, like this, or just another bullish fair value gap. And we would do our standard deviation leg of that manipulation. Then we get our zones, our, take profit areas. I'll do that pretty good. Hey, that lines up exactly with PDH. So this would be my ideal scenario here for a, yes, this is being recorded. This would be my ideal situation for a long today for continuation to PDH, as we've now taken PDH. Once we flip like this and previous day highs are being taken, we want to flip to that bullish mindset until a previous day low is taken. So I would love for Asia to come up into here, either during this 4-hour and come back down, or during the 2200 4-hour. So open high, low close, and come back. If we can get something clean in here, a clean break with displacement, I would quite happily look for a short. And we would get a Asia manipulation zone, and we look for shorts from the retest of this zone, and we can just ride down. This steps down and then look for that elevator up in London. And same thing, looking for those macro times. So if we're coming into this H4, this 4-hour candle, and we open high, we break structure, the retest of the zone, we want to get around that 23 10, 23, 15 time frame. Being that new 1 hour candle within this would open high, we'd get in on the wick, and then we ride the expansion down. We hit SD 1.5, stop loss to break even, TP1 on the first account, and then hopefully it just grinds down like this, building all these liquidity levels, which will then give us confluence for a long in London. How are you going? Does that all make sense to everyone? And how we can use these zones and PD arrays within our OT areas. We don't want a long here. We're up in premium. We're in Asia. We want Asia to build puzzle pieces for London. We have New York PM builds puzzle pieces for Asia. So it's built at the high level here that we would like to see rejection. And then London will build the puzzle pieces for New York. Just have a drink of coffee while you guys are typing. All right. How do you expect the NDOG and NMOD to play out in this price action? Let's take a look. Let's pop them on. So we've got this green one is our NWOG here. And we can use that as well as the arrays here, the PD arrays within around that OTE area. So it can definitely be marked out here. It's definitely around our point of interest. So yeah, just another confluence level to add to the chart around our point of interest areas. Is it possible for me to further elaborate on the H4 sections? Yeah. So similar to what we talked about before on the daily, when we were looking for the daily to open, how did it open low into London? So the daily's opened, low, high, and then it comes down and closes. That's the formation of the daily candle. For a 4 hour, we're looking for the same thing. So that's why we've marked out the vertical levels of the 4 hour. And we're looking, so for for Asia here, for this to turn bearish and to come down for a London long later, we want this 4 hour candle that opens at 2200 and closes at 2 a.m. to do the opposite of that. So we want it to open high, come back, and sort of like work its way down and low and then close. So that way when it opens, it's creating the high wick of that 4 hour. We get our break of structure, our change in state of delivery, a retest of that wick area, And then we want to catch the expansion, the body of that H4, that 4-hour candle. We want the expansion of that body. And that's where we would be taking profit on the way down here of the 4-hour expansion, if that's what plays out. Does that help answer your question? So that's exactly what was going on. If we go back to our daily review, and we look at the vertical lines here, so these are our 4-hour opens, these dotted ones here. Yeah. And that's exactly what played out for London. So we build up the liquidity during Asia and we come back, made these nice liquidity levels. It's opened, created the low of the 4-hour, and then expanded up, creating a bullish 4-hour. And the next one, same thing. We've opened, it's created the low in quarter 3, low in quarter 3 of New York AM, and expanded up. And we're just trying to get in to positions within those 4-hour wicks. And then with the news here, it's just open low and then bang. That's the main expansion, was in this 4-hour candle after the news for our PM session 1400 to 1800. Open low, creates the high, comes back. So then this becomes the wick of the 4-hour. And so what we're doing, by using the 5-minute time frame, we're aligning these 5-minute standard deviations with the H4 candles, which seem to be working quite well. As we can see here. Very good, guys. What else have we got? Any insight on when we should pivot our thought to bearish if we aren't done going down? Close under the OTE. Yeah, so if we start getting, let's pull a 1-hour chart up and have a look at as well. Can't remember how much I've done on this 1-hour chart. Let's take a look. Here we go. So you might have been looking at, so for the weekly candle, we've got, we had this break here. So I think that's sort of our, a bit of our line in the sand. If Monday's high gets taken, you know, we can definitely stay with a bullish bias. And we've got that, our previous Monday low here is holding the ground, holding the base level. So on ES, we actually swept this low and we've come back up. So we've got SMT here at the low. We've got a 1-hour zone here, which we've retested. And we're currently pushing up. So I was thinking originally you would have a Monday high of the week. So we've got this zone here that we've drawn in. We've got our change in state delivery here. We had our displacement. And we've got our PD arrays within this zone. So as these zones start getting flipped, and you know, these PD arrays start getting flipped, then it's fair to say the bullish structure is plausible for the rest of the week until, like, unless we reject here, and we're at 50% of this level. So this inverted FEG, this IBISI here is pretty important. To flip back to bearish, I'll be looking for rejection here and for price to come back out of this zone. You know, like bearish PD arrays are being disrespected at the moment. So this, this inverted fair value gap here is quite important at the moment, I think. And we're coming into Thursday. So plausible Tuesday low of the week until it's not. Be very interested to see if Monday gets tagged today. And if we look at market structure, you know, we're making high lows, high highs until we don't. Does that help answer your question? So I like to look at these similar to when we're in that 5-minute structure. You know, if we're short after this break and we're short here, and then the arrays that we were using to get short on, if this was a 5-minute zone, they start getting flipped. We close the trade. Yeah, and we need to flip bullish. That's why I'd normally say invalidation above this BC that caused the 1 hour manipulation swing or a 5-minute manipulation swing. Yeah. Keen to see how the rest of the week plays out. We can we'll review this chart tomorrow as well in tomorrow's stream. And if we look at the we'll pop that weekly PO3 candle on. So this is our weekly so far. So open low. Yeah, plausible high close. And we'll turn that back off. Very good. Keen to see how this plays out. And yeah, watching to see how far this extends for a plausible Asia reversal up here to catch down into London. It's so good if you can, if we can plot these moves right and get these lows into a long here, getting 2 nice trades with the standard deviations over multiple accounts makes for a very nice day. Well, good guys. Well, we might leave it there. Keep watching price, and if we get a break up here or a change in state of delivery, I'll draw out the zone and pop it into our main chat, and we'll go from there. That's interesting. We've got very nice member's name there. Shut out the noise and stick to the plan. He's typing. It says it all, and exactly in line. We don't jump into trades. We don't wait. We don't think, okay, it's definitely got to go down and enter short now. We wait for the 1 hour or the 4 hour opens. We wait for the zones. We wait for the macro times. If price goes without us, without retesting a zone, which happens occasionally, we don't do anything. We just watch it. We can note it down. We will be able to find the recording for this. I'll pop it into my channel and in the main chat as well. the indicator that plots the red below until above. That's not, you guys, it's not an indicator that is available at the moment. It's just one that I've been testing, which one of our members, Staffy, has been working on. Yeah. And what that does is it plots the levels. So as the levels are being marked out, he grabs statistical data and it gives us the data on the each 30-minute high and what it is to hit. So if we go, like if we use our replay, if we go back to where London was, and we can see them build up here. If we zoom in. So we've come into London, we've swept all of these lows here, which had like 86% chance of being swept. And then we've got all of these levels, so 87% chance that this high here from 2050 will get swept. Adds more confluence to the long. And so all of these low levels got swept, that is indicator marked out, as did all the high levels. So we can see they go, they turn to a darker color once they get swept. And we took that high in New York AM. Might be something, maybe at some stage during the development of the indicator that we can get Staffy on as well to do a talk about it. If you had 1 hour to trade in the morning, how would you go about it? 10 minutes before hourly open, yeah. So, like, which session do you normally work on? Are you in New York or London? New York. So if I only had 1 hour to trade in New York, I'd be looking for that 10 o'clock 4 hour candle formation. So I would want to look for that 10, if bullish, I'd want to look for that 10 o'clock to open low and high close. And preferably I'd want the low of that 10 o'clock 4 hour candle to come into a quarter 3 manipulation zone. So just move this out of the way. So where are we? New York, quarter 3. So let's say we've just been creating some liquidity before New York quarter 3. We come down, so we're bullish on the day. We break the lows. We break structure here. We get our change in state of delivery. And then at 10:10, we want a retest of this zone. That's your entry point for your hour. You get your standard deviations on. And you get your long positions on from that 10 o'clock macro. If I only had an hour during New York, that would be the hour that I would want. So that's what you're looking for within that hour. We're using the 4 hour candle and we want that to open, say it opens here at 10 and that creates the break of structure. We want that to open low and then high close, or the opposite for bearish activity, bearish day. All good. All right, guys, I'll end the stream there. It's been fun. I appreciate all the questions. I enjoy the streams a lot more when everyone's talking. It's good. All right, well, we'll see you in the chat, and hopefully later we can possibly get a short from up here.